But I guess my question is like, if you're someone, I will insert myself into this conversation. Like, I do not have an extensive background in trading financial markets and scrutinizing, public documents and bank research and stuff. But people do have like an instinctive understanding of AI because we're sort of growing up with it. So, like, how does someone who is a good prediction market trader like start to accumulate the knowledge base to trade these very, very high volume, like very provocative AI markets? What is the way in for that type of person?
Well, I think that there's sort of two ways. I think that there within prediction markets, there's still a very good avenue to express sort of information asymmetry.
Yeah,
And that is that the fact that like not, especially relative to more developed markets, there's still I think there's still a lot more like qualitative edge to be had. Um, I think that people really, understand because these markets are so new, the pricing dynamics, you know,
yeah,
aren't at where like, I would say the stock market or the bond market is um, in terms of pricing the distribution of outcomes. I think that there's a
yeah,
lot of money to be made in prediction markets, sort of having a really good feel for what the distribution of outcomes is. And that to me is like a much more interesting lane to come into this as opposed to sort of thinking about it cleanly and just a binary yes, no. I think that is actually what these markets are, but there's a lot of room, I think, around the edges.
yeah,
Um, because it's not, and this has kind of been my point with the sort of like the Anthropic piece, is the market is, very human nature to price these things linearly. Uh, but this is not a linear event, what's going on.
yeah,
Nothing about it is. And I have a sense it won't be linear in either direction. Um, so I think that, outside of just being a massive domain expert, I think there's a lot of room to enter the space. Just thinking holistically about the range of outcomes and finding where those gaps are in these markets because these markets are new and they price um they don't I don't think they price distributions as accurately as say, more established markets are. And I think that's a pretty big opportunity uh going forward.
cool. Let me just ask you real quick. So, DGen pick here. So I saw the whole world freak out 2 weeks ago, which feels like forever ago, because Moonshot AI dropped Kimi 3 or whatever it was. Oh my gosh, open source AI is coming for us. We're going to be slaves to the CCP because of this. But what I see when I go on Polymarket US and polymarket.com is you can buy like these markets for who will have the best model at the end of July, August, September, and then like what companies will have the best model before the year's over. And you can buy very, very cheap shares of some of these open source, Moonshot, XAI, Alibaba for like 1 cent every month. And you can buy them for 13 cents by the end of the year. Like, do you see, I will use some fancy words, like, do you see that distribution curve or whatever being favorable enough to say, like, oh, maybe I will buy those, 12-cent shares that an open source AI will overtake Anthropic by the end of the year, or I will buy that 1 cent share that could go to like 10 cents, that the right few things will happen in September or October that Kimi or Alibaba or something like that can challenge for, post position. Um, is that a level of idiocy that you would sink to, or is that just idiocy?
So I wouldn't say it's idiocy. I think my approach, especially within the more like highly technical questions like that one, um, my approach is that I think will become interesting is sort of like what are the relative value dynamics within that? Because I think it's very hard for me as someone who's not really a domain expert to kind of have a really strong view of like who has an outsized chance of being the strongest model. There's especially now there's so many. Um, I think that, an interesting way to think about this is have sort of like a cross sectional of, there's, this market of best model. We were just talking about valuation markets and like, are those two things singing from the same song sheet? Um, and as a trade I did that actually worked out quite well, a few months ago was looking at, in the US economy, the unemployment rate versus the Fed funds rate. And the distribution outcomes that one market was pricing versus the other, even though functionally they should be highly correlated, given a lot of Fed action is just based off of the labor market. That's half of their dual mandate. They weren't priced the same, and so I had a thesis that buying one, selling the other was a good trade. And I think that within the AI ecosystem, a lot of stuff cross sectionally, especially in prediction markets, if you look at it, it's a little bit, it's not all congruent. So I do think from that perspective, there's a lot of interesting trades to do it that are a little, I would say, picking which model is the best, even though one, it could be a very convex bet. I just
Yeah.
don't feel I have enough domain expertise to kind of narrow
Yeah.
that down.
Hey, go check out Polymarket. They're back in the US. Just visit polymarket.us for the world's largest prediction markets. 18 and over only. Restriction and eligibility requirements apply. Trading is risky. 100% loss can occur, and it's not available in all jurisdictions. See polymarket.com/TOS for more information. The Polymarket US app serves as an independent software provider and affiliate of Polymarket US and Polymarket Clearing, the CFTC regulated exchange and clearing organization.